Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's go over the market after what was a pretty volatile and spicy day, a day that I mainly sat out. I did trade the volatility a little bit, took a very small L, like literally $100, which it is what it is. Sometimes you take it. I tried trading the volatility a tiny bit, but after that, I just decided, you know what? I'm gonna listen to myself from the morning and say, I'm good, I'll sit out. And I'm kind of glad I did for the most part. Now, with that being said, let's jump into it. If you enjoyed, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live for just $2.99 a month. You get access to all my intraday thoughts, posts, updates on Tesla, sometimes the broader market as a whole, every single day. The market is open, so definitely check it out. Again, just $2.99 a month. A decent amount of posts today, especially around and after the FOMC meeting. And for $5, access to all of that, plus NVIDIA daily updates as well. But jumping into a Tesla closing, about a minute left, but closing day, it seems like ever so slightly in the red. We'll say just above $227 per share is where I'll assume it closes, somewhere around there, a little bit of a spike there. 227.5, we'll say, right? Which compared to the market, actually surprisingly, Tesla, holding up respectably, we'll say. Definitely not crazy, crazy well, like, oh my goodness, right? But, respectably, we'll say, considering the market is down about half a percentile on the QQQ. So let's go over, I have a haircut soon, so I have to make these videos quick and I have to record in video. So let's just jump into it. So, concerning, right? Concerning, very concerning. Let's talk about the 1 hour first. This is where things got very interesting, right? Closing actually at the lows of the day seems like too, which is not ideal, or pretty much lows of the day. Yeah, pretty much lows of the day. Anyway, so the 1 hour interesting stuff is we actually had after, we had the rate cut announcement, we had this massive candle right here, came up to pretty much that major range, 232, 235, and found some resistance, came back down, and then we ultimately actually went back up and we actually crossed 235. This is where I pretty much took the L because I was about to trade this breakout, which is, it's very risky to trade like this. Usually you want to get a confirmed breakout, 1 hour candle closure, come back, retest, bam, you enter on that. That's the most ideal scenario. But I tried to kind of, I was expecting some potential of continuation. We didn't get it, so I ended up taking, again, like that very small loss. I gave my stop losses pretty tight. But the point I'm trying to make here is the fact that we went above it. We actually broke above 235 on the 1 hour and the daily, technically, pretty much every time frame, which we haven't before. We essentially had a break of change of character, right? Which is good. The issue is, and this is where candle closures are really important. I always talk about candle closures. It's important to get candle closures above, level breakouts, breakdowns, whatever. It's important to get candle closures. In my opinion, 15 minutes sometimes is good enough, but I prefer to wait for an hour. The issue with the 1 hour sometimes is the fact that you can miss the moves, right? You can definitely miss the moves, right? Because they'll take too long. By the time it finally does close, it's well above that now. That's where there's a fine balance in risk versus reward, of course, naturally. But ideally, if you get a 1 hour candle closure above this level, 235, well, that's pretty damn good. We obviously didn't get that despite breaking above those levels and got smacked back down pretty aggressively, pretty much during and after FOM or Fed Powell. Jay Powell was talking and pretty much finished talking. The market just continued selling off, right? Because the market did get its 50 basis points cut today. I kept wanting to say hike because we kept getting hikes, cuts, right? Which is what the market was expecting, but there were some, issues in the report. So the market's clearly not, super happy about it. And, there's a chance that the Fed won't be cutting overall as much towards the year end as the market expected, despite the 50 points today, which was essentially a double cut, right? 225s. Anyway, so the point I'm trying to make here is the fact that Tesla, massive sell-off, closing at the lows of the day. And the 1 hour, is still not looking too good. Recross to the bearish side on the stochastic. MACD recross to the bearish side. BX trend, fresh lower lows, RSI's going into oversold territories, not there just yet, but also looking bearish. But what I really care about right now is a bit of the bigger picture, right? Because again, what I currently expect based on today's closure is I still expect a continuation of a flush tomorrow, right? I personally want to see a flush on Tesla back down, honestly, 222, 221, something like that. Bottom trend line, 21 EMA. I want to see a flush towards that. But as of right now, what I want to see is I want to see this hold, and then we get an epic bull trap into an epic bear trap into an epic bull trap, and then we crash. Maybe not crash, but we definitely fall a decent amounts, right? That's like my current base projection, and I still remain in that, right? This is kind of roughly what I mentioned yesterday. I just didn't expect we'll get this 235 massive bull trap today like this. Like this was a pretty sizable bull trap. We're also printing a bearish inverted hammer daily candle on the chart, obviously on the daily chart. So that's something else to pay attention to as well. But that's kind of my base projection on Tesla right now, right? Especially based on this very weak closure, pretty much closing at the lows of the day. But what I care about right now that I'm really looking at specifically is the 4 hour and the daily. The 4 hour I'm actually looking at because it gives you a slightly more aggressive version of the daily, but it's like slightly ahead, if that makes sense. Because obviously with the 4 hour, we'll probably influence what the daily ends up showing. And the 4 hours showing a lot of bearishness in my opinion, right? This is just, I'm seeing a lot of red signals here. Like, I'll be completely honest, just, I'll say how it is, right? I'll say what I'm personally thinking and seeing. I could be completely wrong. I want to make that very clear. I can be completely wrong. I'm not perfect. I'm not an oracle. I will be wrong at times. But based on what I'm personally seeing right now in my indicators that I follow on the 4 hour, man, it's not looking too good, man. I'll be completely honest. This is just, if I look at these indicators, it's hard to look at this and be like, I want to buy right here, right now. Obviously, there's a chance you're lucky and it bounces from here, and who knows? Obviously, nothing's guaranteed. But man, MACD, bearish crossover, fresh bearish crossover on the final 4 hour candle. Not great. RSI below the 50, below the yellow median line thing, right? Not great. Stochastic, my main one, obviously bearish crossover on the 4 hour with some decent follow through, right? It crossed over bearish pretty much when we were right around here, had some sideways action, but even while we were going upwards like this, for the most part, it was still trending downwards. And, we obviously confirmed that move to the downside. And now it's expanding. The green is expanding from the red and it's pointing straight down. Like, I'm seeing these kind of signs, right? BX trend or lower lows. Like, I'm seeing all these things on the 4 hour. None of them are bullish. Like, I'm sorry, it is what it is, but just none of them are bullish to me right now, right? They all scream bearish, right? And the issue is the fact that it is starting to slowly reflect on the daily. MACD is still setting lower lows. RSI is starting to look a little shakier. Actually, we literally got, because we ended up closing at the lows of the day, we did actually get a confirmation of a bearish crossover on the stochastic. Now, granted, it is a tiny crossover, so it's not like the most convincing crossover ever, but a crossover nonetheless. If I zoom in, you can kind of see it. It officially has crossed over, right? That's not good. We have, of course, the BX trend on the daily also making, red band, which started yesterday, we mentioned that, and also lower highs. Nothing looks bullish here. Like, I'll be completely honest. Literally, the only thing that's bullish is if you just only look at the chart, ignore these indicators, only look at the chart. We're above the 21 EMA. We're still technically in this rising pattern, right? This rising channel wedge, whatever, right? And we still technically have this rising triangle in play as well, which is a bullish pattern. Like, if that's probably the only bullish catalyst remaining on the chart, right? And it is a valid one. Like, I want to make that clear. It is still a valid bullish catalyst. Like, they do kind of cancel each other out. Like, all of these look bearish except for the MACD technically, I guess, because it is cross bullish. But, technically, while we're inside this rising channel, wedge, whatever, rising triangle, we are bullish. And the rising wedge pattern, if that's the one that plays out, is a bullish pattern. So that's the problem here, right? There's a lot of things that are contradicting each other, right? My personal indicators right now, the way I look at it is I lean more bearish. I do lean more bearish until we get that at least a 1 hour closure above 235, or we finally close below pretty much 221, 220, something like that, like a daily closure below that. That would also be that would be much more of a confirmation of bearishness, right? Right now, I just lean bearish. That doesn't mean I am bearish. I lean bearish. Now, once we do get to, assuming tomorrow, let's say to 222, 221, I'll actually start leaning a little bit more bullish, assuming we, of course, hold that trend line. But that's kind of the way I'm looking at it. Options flow today has been pretty bearish for the most part towards the end of the day. Obviously, I don't think it's any surprise, really. Some bullishness came in towards the close. You can see over here a little bit of bullishness, but for the most part, a lot of bearish calls came in, right? We have SPY, of course, making a fresh all-time highs intraday, but closing with an inverted hammer candle as well, potentially showing some bearish reactions here, bearish reversal signals. Same exact thing with QQQ. Also a false breakout above this trend line. And like I say, whenever you get false breakouts, usually you snap back in the opposite direction. Now, whether or not that'll happen this time, nobody knows, because one thing that is potentially still good for the market is the fact that the 21 EMA and the market band is actually right below it, or the market bias is right below it, which, in theory should act as a support. So, I wouldn't say the market's ready to roll over or anything like that just yet. But, the fact that we did get essentially a false breakout today, not great, right? Like, that's a little bit concerning. That is a little bit on the concerning end, right? On the 4 hour, you can see same idea as Tesla pretty much, right? Lower lows on the bands, red band over here on the BX trender, stochastic is bearish, RSI is bearish, MACD is making lower highs, right? Still technically cross bullish, but and the daily is, looking like it's also getting ready to get to that stage as well. So I don't know, man. Things are looking not certain, to say the least, in my opinion, not certain. And it's not looking very bullish, in my opinion, as well. I wouldn't say it's overwhelmingly bearish just yet, because the dailies are still kind of holding up for the most part. But definitely not bullish. Definitely not something I would just buy. Because again, in my opinion, if you're buying here, not financial advice, just me thinking out loud. If you're buying here, you're pretty much just kind of gambling that you're just, getting lucky to time a bottom here. Can happen. It does happen. But just strictly through indicators and strictly through just trying to be consistent with some form of plan, really, you know, it's a little bit of a risky buy here in my opinion until we, you know, to a stronger support down, you know, in the mid to low 220s, let's say, on Tesla. But anyway, that's all I got for you. I gotta end this video, gotta record NVIDIA because I do have to head out to a haircut pretty soon. So thanks for watching. I'll see you tomorrow. Peace.